there's real risk, of course, economically to small cap stocks because they're the most economically sensitive to the economy. Economic data is slowing down. That is going to impede earnings at some point. And remember, about 40% of small cap stocks are non-profitable, particularly when you look at the Russell 2000 index. Here's what you need to know before the bell. Let's talk a little bit about small caps this morning. Small caps have been on a tear here as of late. And again, lots of speculative bets now being put on small cap stocks, etc. That's okay. Again, small caps got really beaten up here in August as well. In April as well. They've had a very nice rally here. A lot of people getting excited about small caps. We're seeing a lot of retail investors pile into small caps. Just be a little bit careful here. We're approaching the 200-day moving average. You are at a very elevated momentum signal as well as relative strength, pretty overbought here. If you're trading this trade, I would be looking to potentially take some profits here sooner than later. There's real risk, of course, economically to small cap stocks because they're the most economically sensitive to the economy. Economic data is slowing down. That is going to impede earnings at some point. And remember, about 40% of small cap stocks are non-profitable, particularly when you look at the Russell 2000 index. You have a lot of companies in the Russell 2000 that are non-profitable. And again, we're just about to approach earnings season. And the Russell 2000, like the S&P 600, is also approaching the 200-day moving average. It is very overbought on multiple levels as well. So again, there's nothing wrong with trading that small cap space, but you're kind of at the wrong cycle. You want to be catching small caps coming out of a recessionary downturn. That's when they tend to perform the best. We're at the kind of the peak of an economic growth cycle that is starting to slow down. Higher interest rates, inflation, those type of things still impeding the economy. We're seeing, for instance, delinquency rates and default rates starting to rise. These companies are the most exposed to that. They can't absorb a lot of delinquencies and defaults like large cap companies can. So again, nothing wrong with this trade. Just be careful. Just remember also that, while the S&P is close to setting all-time highs, small caps are still way back there. They've just been a real laggard over time. And again, if you go back, 10 years, just as an example, 10, even 15 years going back to 2008, small caps, mid caps, emerging markets, international markets have vastly underperformed large cap and of course mega cap as well, but also the NASDAQ. So again, there's just, the fact that we have slower economic growth that is going to impair their ability to grow. But again, price-wise, they're having a fantastic rally right now. Nothing wrong with that. Just understand we're getting decently overbought on multiple levels. So just don't forget to take some profits, rebalance some risk. If we do get in some trouble in July or August, they're going to have a pullback just along with the rest of the market as well. They're not immune to slower economic growth. All right, that's what you need to know before the bell this morning.